How to build a trading plan. Step-by-step introduction. A trading plan is a written set of rules that defines how and when a trader enters and exits trades. It helps traders stay disciplined, avoid emotional decisions, and remain consistent in their strategy. Whether you're trading Forex, stocks, or commodities with a broker like FXCM, having a trading plan is essential for long-term success. Here's how to build one, step by step. Step 1. Define your goals. Start by setting clear, realistic goals. Ask yourself, how much capital can I afford to risk? What are my daily, weekly, or monthly profit targets? Am I trading for income, growth, or practice? Clear goals will guide your entire trading journey. Step 2. Choose a trading style. Select a style that fits your schedule and personality. Day trading, short-term, multiple trades a day. Swing trading, holding trades for days. Position trading, long-term trades. Your lifestyle and risk tolerance will help determine the best fit. Step 3. Select your markets. Decide what instruments to trade: Forex pairs, indices, commodities, etc. Focus on markets that suit your trading hours and offer good liquidity. Step 4. Develop entry and exit rules. This is the core of your strategy. Define which indicators or price patterns trigger a trade, where to place stop loss and take profit orders, how much to risk per trade. Test your system in a demo account to refine it. Step 5. Set risk management rules. Determine how much capital to risk per trade, e.g., 1 to 2%. Avoid over-leveraging. Use stop losses to protect your account. Step 6. Create a trading routine plan. When to analyze markets, trade, and review performance. Keep a trading journal to record each trade and learn from mistakes. Building a trading plan is like building a roadmap. It keeps you focused, reduces emotional trading, and improves consistency. With FXCM's tools and educational resources, creating and following a personalized trading plan becomes much easier.